Good. All right. I'm Austin Billion.
I'm Marnie Ortinsky.
We got the industrial section and basic materials. So a quick overview. You also need to understand there's 14 different industries. In the industrial sector. Right now, the industrials make up 9.5% of the entire sectors. It performs best in the mid-cycle, mid-business cycle, almost a little bit later on that. This was a couple basic, this was taken on Monday, or no, I did update this today. They were positive on Monday, but they went down just a little bit, down 0.91%, and this was the SPDR, so it's a comparison to it. Total returns was up for the 5-year on both for the market value and the net asset value, but it was down for 1 year. That was pretty consistent. The sectors with the best performance in the industrial was the commercial services and supply and road and rail though. Everything else was negative that I saw. Everything else had a negative percentage. This was a graph of that to help kind of put that into perspective. The purple line was the actual S&P, and the blue line is the SPDR comparison. And you'll notice that they all follow. It's like almost like a reflection. They all have pretty much the exact same ups and downs. Just one seems to be sit a little bit below it. This is broken down in the industrial sectors. You have capital goods, commercial and professional services, and transportation. This is just all 14 of those different sectors kind of grouped together. So the capital goods, they manufacture building components, home improvement products, etc. Commercial and professional services and supplies, that's a big conglomeration of a bunch of random, pretty specific things, everything from commercial printing, facility services, supplies. And then transportation is pretty self-explanatory. It's air, rail, road, maritime. It does not include cruise ships. So I chose it was aerospace and defense, one that I'm going to break down a little bit more. So a couple of the big players in that were Boeing, TransDigm, and Lockheed. We have Lockheed in our portfolio. Boeing has jumped up pretty significantly, and I think it was the past 5 years. They're a pretty big jump. It's stayed relatively consistently high like that. This is a map showing the business cycle that industrials and materials work best in. And so special metrics for these, or for industrials, it was equity value over sales, and also research and development. Because it's a capital intensive industry, equity value seems pretty important. And then research and development, because that's essentially what they do. They're creating new technology, better products. So you want to see whether or not they're going to be creating anything new. For example, this is a new plane that Boeing is coming up with. It's supposed to go with Mach 1.4, I think is what they're shooting for. Cut off like intertransatlantic flight of 3 hours, is what they were thinking. So for economic indicators of this, favors low unemployment because it likes a strong economy. It has a high demand for technical labor, which they're having a little bit of trouble achieving. For example, most of their workforce is about 45 and over. There's not as many young skilled labor coming into this market. And then of course war and military budgets, since this is aerospace and defense. Currency rates are very international sector. So if the currency rate changes in between different countries, it's going to affect them. Regulation is different for every country. For imports, exports, they also have to worry a lot about intellectual property, since they do have these patents and specific technology that they're using, making sure they're not copying somebody else, or that somebody else isn't copying them. As for what makes them profitable, they obviously they're going to have contracts. They're going to, mainly with the U.S. or governments, they want to make sure they price it accurately. If they say they can sell you 300,000 planes for this much, and it turns out they have to do it for a lot more, that's going to affect their revenues. And again, the technical skill. You have these key engineering personnel and executives that have a lot of say and experience in the field and with the company. If they lose those people, it makes a big impact. So for the pestle analysis, one important thing in this is political. Specifically, we just pulled out of the 1987 Intermediate Range Nuclear Forces Treaty. And this was with Russia there. It was essentially limiting what kind of nukes we could make. And we're saying that Russia wasn't following the rules, so now we're pulled out of it, and so I think that it's gonna kind of up what we're gonna be doing, obviously, with missiles. Economic, like I said, they favor a strong economy. Unless social trends, unless it's something like the Vietnam War where there's mass protests, that doesn't really seem to be a big factor. Technological, all of these companies are based in innovation. They're making more efficient engines. They need to upgrade their computer security, what kind of programs their technology runs. And legal, like I said, import and export laws are going to play a big factor in what and who they sell to. Environmental, there's not a big impact there. I mean, and then the Porter's Five Forces, so the threat of new interests, it's pretty low risk because it's very capital intensive. Bargaining power of suppliers, I put that as medium-high. There's more power to the suppliers because when you buy planes, you want to look for a technical competence. You have these lists of, these are what we want to see in our product, who can provide this to us. Bargaining power of buyers, I'll put that as medium. There's not very many suppliers, but these decisions are pretty long-term. And then threat of substitutes, it's pretty low risk. All the basic parts and equipment that can be substituted, that's fine. But the end product is dominated by those big companies like Lockheed and Boeing. And you want to make, for the majority, a lot of those companies have such a good reputation that they are consistently come back to. And so there is rivalry overall in this, but it's mainly dominated by some pretty large companies.
And I wanted to go over the airlines just because I'm gonna try and convince Austin to possibly look into getting in airlines for our sector in the future. But this is just kind of an overview of Southwest Airlines, Alaska Air, and then American and Delta. The only one that's not doing super well is Southwest, but they don't have very high numbers going up anyway. The airlines are a cyclical stock, so when the economy is not doing well, people aren't traveling, so the airlines aren't going to do particularly well. And then it is very sensitive to economic growth. Per capita income, disposable income, and consumer confidence are key drivers for the demand for air transport. Some economic indicators are revenue, passenger miles, passenger mile yield, average seat mile, load factor, passenger revenue per available seat mile, and then the cost per available seat mile. So this just kind of goes into how they determine all their performance and what's making the most money, etc. So some profit drivers include charging extra for baggage and other fees that they have. Everything seems to be going up recently. Limiting capacity, I know Alaska is now allowing 2 free bags for if you're on the Club 49, but for anybody who's not, you have to pay. Honestly, I don't even know because I'm part of Club 49, but it is getting higher and higher, so that is a way that they're increasing their profits. Emerging trends include continued growth and investment in airport infrastructure projects, increased fuel costs, diversification of revenue, etc. And then the Porter's Five Forces real quick. Competition in the industry is low to moderate. There's not a lot of competitors in the airline industry, and they have a lot of customer loyalty. Like I only fly Alaska Air. My mom only flies Delta, so it's kind of to each their own. Potential of new entrants is very low because it's very expensive to get into the industry, and there's a lot of barriers to entry, regulations by the government, etc. The power of suppliers is high. The plane manufacturers there's only 2, so they can kind of control that. The fuel costs are inelastic and non-substitutable. Power of customers is moderate to high. The number of customers is high, but substitute transportation is available. You can go by rail, by bus, car, etc., a boat. So, but then the cost of changing tickets is low. And then the threat of substitute products is also the substitute transportation, which I just talked about. Okay. And then, so basic materials sector overview. It includes companies that are in the business of discovery, development, and processing raw materials. It comprises 2.65% of the market, and it performs best in the late business cycle. Some examples, actually, next slide, please. Oh, the performance. So the 5-year percent change is 22.24% increase, which in the past year it's gone down 8.46. And the worst subsector is the metals and mining, which has gone down 16.1% in the past 5 years. So there's 3 basic sectors in the basic materials. The mining and refining metals, which would be diamond mining, gold mining, iron ore mining, the mining support activities, mining machinery and equipment, manufacturing. Forestry products is paper making, logging, paper mills, etc. And then the chemical products are diversified chemicals, adhesives, biotechnology chemicals, so plastics, etc. So a few of the mining and refining metals companies that I looked at was Barrick Gold Company, which they've all had increases recently, but like it had said earlier, it has been an overall decrease in the past years.
What's the time frame? You guys have these green numbers on your slides, but it's not clear to me.
On the other one, it was 5-year and 1 year for the 2 different numbers that were
Okay.
on there.
This one is the recent one, so it was the past month.
Okay.
And then Martin Marietta Materials, that is one that we own currently. Vulcan Materials is also gone up. So the basic materials sector in general is very cyclical. And when the economy is booming, people are building and upgrading and buying different metals and materials. So some special metrics would be depletion, like in a gravel pit. They have a certain way to figure out how long that gravel pit is going to last. So if they determine it's going to last 15 years, after 5 years, they'll have a depletion on their financial schedule. Their profit margin and operating margin is a really good metric, just because it's, they don't all have inventory, so you can't really check as far as inventory turnover, so you kind of have to go to those margins. Debt ratios, there's a lot of debt because of the large amount of equipment and the expense of the equipment, so you kind of have to look at those. And then of course capital expenditures on all of that equipment. So of course, when the economy is booming, precious metals are bought more often. Another economic indicator is the Producer Price Index, which is a weighted index of prices measured at the wholesale or producer level, and it's released by the Bureau of Labor Statistics. And it measures the average changes over time in the selling prices received by domestic producers. So some profit drivers and emerging trends. The supply efficiency, which would be investing in advanced technology for their supply. Automation, wait, that's for the next one. Oh, sorry. There, smart mining. So they want to invest in advanced technology that will increase the efficiency gains and cost control. They also have the environmental regulations, which we'll get into at the bottom there. And then the metal demand's expecting to decrease. So the Chinese demand is dropping, and it's expected to drop substantially over the next 20 years, I believe, until 2050, 30 years. And then a lot of metal recycling has been increasing. So people with their jewelry and stuff, rather than going and buying new jewelry, they're repurposing their old jewelry, etc. So that's a big market right now. And then of course, lowering cost of operations is a lot of automated equipment, artificial intelligence, blockchains, drones, 3D printing, anything to lower the cost of their operations. And then of course, environmental regulations. These different companies have a lot of different regulations that they have to adapt their corporate strategies to. in order to make sure that they're abiding by the, well, the different laws that they have now as far as air and all that. So the Porter's 5 forces, the threat of new entrants is low. It has an incredibly high cost of entry. The bargaining power of buyers is high. The quality of the precious metals is hard to measure. And the buyers always seek the lowest prices, so they're gonna go wherever they can to get the lowest prices. So they have that high bargaining. The threat of substitutes is medium to high. Other precious metals and gems are available. There are a lot of things that you have to have a specific metal for. They use gold in different electronics, and that can't be substituted, so those are those. But there are other metals that you can substitute, so they're gonna try and go for the cheaper one and substitute it that way. So the bargaining power of suppliers is medium to high. Of course, the government has all the regulations that create substantial barriers, and there's a lot of permits needed. And then the rivalry is medium to high because the price is set by the market generally, and the competition for land and reserves is very high. So if a company buys some land, gets that reserve, those precious metals are on a first-come basis. So you have what you have and the other company has what they have, and that makes the competition pretty high.
Nice, that is it. Questions?
So you guys went maybe a little long on that, I didn't have my timing start.
Yeah,
I think it's
16 and a half
16,
minutes.
okay, you're good, you're good.
Should we
Um,
stop it? No.
Yeah, you can stop it.
Oh, never mind.
Well, I like it